Hello, everyone. Welcome back to another session of the Let's Get Technical series. I am Kavita Agrawal, the founder of EXP-Invest, a company dedicated to retail traders. Today, we are here to talk about swing trading with an example. A few months back actually, I gave a recommendation to my members in the stock JINDALSTEL. How was that stock idea picked out? What was the reason that we took that swing trade? How did we manage that position? And finally, how did we end up booking a massive profit of 12.5% in just 14 days? All of those things will be discussed in this session. So, if you are new here and for the first time and wondering why we are doing this session, I will just take 30 seconds to add some context for you. So, I come live 3 times every week. On Mondays, I teach in the Retail Trader Special Series everything about swing trading, which indicators to use, how to apply them on the charts, what are the things that you should look out for. On Wednesday, in the Let's Get Technical series, I take one example of swing trade which I have done and we basically dissect it. And then on Fridays, in the Market Outlook series, I bring to you detailed analysis of the market, covering what the market did, why it did what it did, and what to expect next week. We also do a comparative sector analysis. Now, with this context, this week's stock is Jindal Steel. So I will show you what that stock idea looks like on the active call database, which is my Google sheet. And I will show you the 12.5% profit which was booked, after which we will go on to the charts and we will take a look at how did the chart analysis actually look like. So stay with me. So on the screen now you can see the active calls database. This is what the exclusive plan members receive from my end, right? Here you can see Jindal Steel. So the stock idea was given on the 7th of June 2023. And you can see it's a metals and mining stock, large cap, where 8 to 10% allocation with a medium amount of risk was suggested to members. The holding period was 1 month. Now, when the stock idea was given, the total target was around 20%, but we exited the stock a little bit earlier because the trailing stop loss, which had at that point of time been 586, was almost achieved. Also, the stock had given a strong move in a short period of time, and in our experience of swing trading, what we have seen that such a strong movement usually doesn't last very long. That is, it experiences a pullback. Okay, so we exited the stock on 21st June at 588, booking around 12.5% profit. With this understanding of this particular recommendation, we will now go forward to the charts and envision how this looked like on the charts, on from the indicators perspective, from the chart pattern, candlestick perspective, overall market momentum perspective, and we will analyze why we entered the stock, how we managed the position, and why we exited finally. So I'm going to remove this screen now and we will take a look at the charts. Okay. So on this chart, you can see that 6th of June is right here, 7th of June, right? So this white pin shows the entry, this yellow pin shows the exit. So we will zoom in on this. Now in the yellow pin, so the first thing that really stands out that in our swing trading, we entered the stock soon, but we exited it a lot early, right? So see, how swing trading, how you become successful in swing trading is not that you start buying stocks very fast. You become very good in swing trading by constantly revisiting your past trades, your past analysis, seeing what you did right, what you did wrong, and then repeating those things again and again to become better. Okay, so without being emotionally judgmental about, oh my God, we ended the position too soon, we lost a lot of unrealized profit. The whole purpose of doing past trade analysis is to do an objective analysis, not an emotional analysis. Okay. So, two things that we can observe at the start about this particular stock recommendation was number one, the entry was very good. Number two, the exit was very, very early compared to the entire trend that unfolded in the stock. Okay. So, when we did the entry, the first thing that really stood out. So firstly, this is where I started following the stock. Okay. So the following of the stock started in April, mid of April, but I did not give a call back then because the stock looked like it had some more correction left in it, and I was expecting this blue line, which is the 200 EMA of the daily time frame, to get achieved sometime soon. So when the stock came down to the 200 EMA of the daily time frame, and it gave a positive divergence on the RSI, and the volume started to pick up, right? So the volume, you see, the histogram started getting green. The histogram will only get green, turn green, when the 20 EMA of the volume crosses over the 100 EMA of the volume. So when it turned green, it was a signal that the volume is crossing over, is increasing, okay, over the last around 3 months average volumes. So when the volume was clearly very consistent and the stock was taking good support at this trend line here, it was a signal to me that we should go ahead and purchase the stock. So what did I do? I gave a buy call to my members on the 7th of June, as you can see here, right? So we started riding this trend. Now, soon after making the purchase here, the volume picked up, which was another good sign. So the stop loss revision began after the stock broke up above this previous resistance zone. Let me just expand this chart a little bit for your sake, okay? And let me take this here. So basically, when the previous high, that is this level, was breached, we did the first revision of the stock idea. I'm going to change this color. There you go. So this is where the first revision comes. So when the previous resistance is breached is when you revise your stop loss for the first time. Okay. So the stop loss, say, which was earlier set at this level when the recommendation was given, the stop loss was simply moved to the next best support level. So when a resistance is breached and sustained, you bring your stop loss to the next best support level. Okay, so just below that, so that in case the support gets breached, you get out of the position then and there, right? So here we can see that the price broke out above this level, right? And it's the same for 2 candles. So we revised the stop loss a little bit higher. Then the price started to move up. Now this naturally becomes the next resistance. So next, when the price moved above, sustained above this level here, this is when this was our next cue to revise the stop loss to the next best support. That's what we did. So next, we see now, in order to find the next best resistance, we need to look a little bit behind. So the next best resistance will come from basically this massive gap. Now what we see here is that a dual gap has been formed in this zone, right? So my expectation was that the price is going to come back down to cover this gap, right? So that is the reason why when we experienced this big gap of around 2%, actually it was a bigger gap than that. We experienced approximately a 2.5% gap, and the prices rallied around 5% in a single day. Now see, what happens is that usually when a stock comes out of the bottom and gives a big gap, which is also called a breakaway gap, it can come back down to retest at least the top zone of the gap, right? That is what we saw happened here. Now, one lesson that we can take away from this is that when there is a breakaway gap that happens on the chart, okay, don't rely too hard on the retesting. Instead, the EMA, especially the 100 and the 50 EMA, start acting as a very good support zone on our target time frame. So for me as a swing trader, the 75-minute is the target time frame, which means that I am making my trading decisions on the basis of the 75-minute chart, right? So this stock comes down to take a retracement, retests, and goes back up. But what happened was that when the stock basically gave a massive move up of 10% right above the resistance zone, and this move up, as you can see, happened in a matter of 2 days, we went ahead and we booked our profits at the level of 588 rupees approximately. This should actually be a little bit higher here. 588 is where we booked our profits, right? Now, if we go one time frame lower, right, let's go on the 15-minute time frame, because whenever we do a swing trade, we don't look at charts only from the only on a single time frame basis. We look at it on a multiple time frames, right? So one thing that was very evident was that the volume was still very strong even when the prices broke out. So one correction that we could have done was, instead of exiting the position, we could have partly booked profits here and re-entered more when the RSI came back down on the 40 minutes, on the level of 40 in the 15-minute time frame, right? What we see here is the stock continued to move back up and it came back down to retest the EMAs again until it kept going up to the point where it started giving a negative divergence on the 15-minute time frame. If you also observe on the 75-minute time frame, by the time the stock reached a good top, it formed a pretty drawn out and long negative divergence. Only when it gave a divergence that took resistance at the level of 60 was a true sign that the stock had actually topped out. Now, if we look at Jindal Steel's current scenario, what we see first of all is that Jindal Steel has experienced sharp downside on high volumes. This is usually not a good sign, right? But if you get into more details of this price activity, you will see that this sell-off was actually what happened on high volumes. And after the price started to go in consolidation, the volume continued to stay high for a while before dampening. But since the 6th of November, that is since 2 days, the price has been going up and so has the volume. So this is an indication that the price is experiencing some positive participation, but because the 15-minute time frame is still quite unstable, it is not recommended to make a long entry in the stock right now. So what we can do is we can set an alert on our 15-minute RSI for the level of around 40 or 38. When that gets triggered, we will come back on the chart of Jindal Steel and see whether it is a good idea to make a long position in it or not. So Jindal Steel is just one of the examples from the active call database which booked a 12.5% profits. What is the objective of the swing trade? The objective of the swing trade is to get a maximum XIRR, that is your internal rate of return. Okay. You use your capital the same way you use a capital in a business. Okay. Now the difference between doing a normal business and swing trading in stock market is that in the business, you don't have outright visibility on what is the best price that you could have fetched for your stock. But in swing trading, you have that visibility. Now, having the visibility that a stock that you sold at 588 went on to forge a high of 710 can lead to a lot of resentment, a lot of psychological stress and hurt. Instead of getting away with that, you need to focus not on what was the probable lowest price which you could have captured or what was the probable highest price at which you could have sold. What you need to focus on is staying true to your strategy. What is your strategy? Your strategy should be defined by you according to what works for you or by your research analyst. Now, if you are associated with a research analyst who does swing trading herself or himself and has a program to help its clients to do swing trading, then first of all, you should start by understanding what are the metrics that are being looked at, what is the involved time frame, what is the target return profile. Obviously not the return profile will not be guaranteed to you by a research analyst, but it is important that you understand what is the targeted return profile so that you can make an informed decision about whether you want to be associated with that particular program or not. I personally, as a SEBI registered analyst, a qualified charter holder of the CFA and the CMT, I run a trade together program in which there is an exclusive plan to which this active call database basically belongs. If you want more information on that, you can use the link, the Telegram link, which I'm dropping in the chat, and you can connect with me through my Telegram channel. With this, I have come to an end of my presentation on Jindal Steel about stocks where your capital might be stuck. You should put the name and the cost price of those stocks. Now, which are the kind of stocks for which you should seek analysis right now? I will give you a brief so that you can make a better decision and use this opportunity optimally for yourself. Go and take a look at your holding statement. Whichever stocks you've been holding for more than at least 2 months and which have more than 5% loss, you need to know your exit strategy. Because remember, the capital which you have put into the stock market, the sole purpose of that capital is to make money for you. That is your income which you earned after a lot of hard work. You don't want that income to be circulating in the market and making money for somebody else. You want that money to make money for you. That's why you came to the stock market in the first place. So if a stock is incurring a loss for you, drop the name of the stock, add the rate, cost price, and I will take a look at the charts in this session and tell you what your next stop loss should be, whether you should hold the stock, whether you should average the stock, whether you should add more to the position to average the stock. So let's take a look at the comments. See, asking for analysis of stocks which you don't have an in-depth knowledge of is not going to fetch you a lot of positive result, because I will do my analysis here and I will go away. But if you go ahead and take a position in stocks on the basis of my analysis without being connected with me personally, you will stand to lose in that. Because remember one thing, money in the market is not made by buying stocks. Money in the market is only made by managing positions. The day you start understanding this, trust me, my friend, you will stop relying on free analysis, free recommendations. So there is a reminder from the ET moderator that if you've liked this session, please drop a like to the video, to the comment below. There is a small like button, and leave a comment also. And if you want to connect with me one-on-one, then click on the link posted by the ET moderator and book a one-on-one session with me to get your portfolio analyzed. We have Mr. Divyank with us, and he's asked for analysis of Berger Paints. So I'm going to share my screen again and open up Berger Paints for him. Okay. So there is a momentum build up and the volume profile. So this massive decline happened against massive volumes, but then the volume has dried up. The price has also recovered to some extent. Let's take a look at the daily time frame. So the daily time frame suggests a very, very strong underlying momentum. So I feel that this momentum, which has started from since around January 23, has been a very starting of a strong uptrend, right? I have a note here which says that it seems to have bottomed out. I'm going to delete that because it's redundant. Okay, I can see that the stock underwent a split, because of which my drawings have also become redundant. So I'm just going to remove all drawings, and I'm going to have my associate redraw my executions on the charts after this call. But let's do the trend lines again. So this is not looking very good. We want a maiden trend line which we can clone. And this, my friends, looks like a very, very perfect maiden trend line, because on the logarithmic chart weekly time frame, you can see just how well it acts as a resistance multiple times. So now I'm going to clone it and pull it. So I think it's fair enough. It's pretty fair to put a trend line right there because price took strong support. Unfortunately, historically, I don't see that point coinciding with much. This seems like a much more relevant point. Okay. See, guys, I've been doing technical analysis for 12 years now, so I have my own method of doing a lot of things. And personally, they work really well for me. So I use a lot of traditional methods when it comes to doing my chart analysis, but fitted to my purpose. See, what I would say is that Berger Paint, sure, the underlying momentum is very strong, but it's not a good time to buy it for the short term just yet. I feel like it will come back down to do a retest of its previous low, because not because of my gut feeling, even though I use the word feel, uh, because of the way the stock moves. Okay. So this stock has a tendency of retesting its lows multiple times before it starts a fresh rally. So I don't think that it's just going to start a rally again so quickly. Also, the volume is not very happy, right? I mean, the volume participation is not there in the price upside. So I think it is going to experience a resistance around 590, 592, which it has already reached, and it's going to come back down. So if you have a short-term position in Berger where you have profits unrealized, I would suggest you exit it and you book your profits and you get out of it. Now, see, here I don't know how much you've allocated in the stock, but also remember that if you want to succeed in stock trading, you have to pay a lot of attention, not just to your risk management, but also to your allocation. Why? If you're over allocating in a particular stock, right, it can hurt your portfolio because if the stock goes up, it's going to drag your entire portfolio down. But if you have under allocated in a stock, it will protect your portfolio when the stock goes down. But if the stock even doubles from its current level, it will not elevate your portfolio. Your entire objective in stock picking and stock trading should be to grow your entire portfolio. Diversification is good, but you have to make sure that you're not diversifying in more than 10 to 12 stocks at a point of time. If you over diversify, you can be at risk. And it is okay to under diversify. See, I know a lot of mature traders who focus on only 4 to 5 positions at a time. I know at least two mature traders who do this, and I've heard of more like very profitable traders who prefer to maintain very concentrated positions, but it has its own downsides. And for a retail trader who's doing this on a part-time basis, it's a very dangerous strategy. Moreover, if you keep buying stocks with the objective of averaging them, not a good strategy. Please don't buy loser stocks. If you do, then you're basically, you may as well give your capital out in charity. So moving on to the next stock, Berger, that was Berger Paint for you. We have Gaurav Bhatia asking for Indigo. The airline stocks are usually not a very good investment because, huge risk there. And specifically in Indigo, it has already given a massive rally in the time gone by. Okay. I personally feel that position in Indigo should be maintained not for a long term because it's already close to a very important resistance. So I personally feel 2800 is a good target level to hold on to Indigo. And if you have a position right now, please maintain a stop loss at 2470. Profile is asking for analysis of ONGC. Okay, so ONGC, ONGC, IOC, BPCL given very good rally recently. And I think in ONGC, it will be good to maintain a target of around 208. And of course, you need to maintain a stop loss also. So this recent spiky low that it has formed, please maintain your stop loss right below that at the level of 191. All right. We have Ankshita. She's asked for analysis on Apollo Tyre. Apollo Tyre has given a very good move today. Unfortunately, it's no longer in the buying zone and it's given a very good turnaround with very good volumes. So what you need to do is you need to wait for Apollo Tyres to come back down a little bit, cool down a little bit. And given the kind of stock Apollo Tyre is, I expect that in few days it can come back to retest the level of around 390 to 400. That would be a good time for you to buy. If you are holding a position there, then please maintain a stop loss at the level of around 390 and continue to hold the stock for a target of around 450. For follow-up analysis and trailing stop losses, please join my Telegram channel. Namshika is asking for analysis of Oro Pharma. So Oro Pharma has also given a pretty move in 5 days, 10% up, very good. The volume is also really nice, really good. But I also feel that Oro Pharma has given a really rapid rally and the volume participation has significantly started to decline near the top, right? So it has a strong resistance at around 995,000, which is also psychologically a very strong resistance zone. So fresh entry is not recommended. And if you have an existing position which is short term in nature, for the short term position maintain a stop loss of 890. For a long term position maintain a stop loss at the level of 830. Rohan has a query on SBIN. He's asking, what is the next target? All right, so let's see SBIN next target. So I think SBIN has reached the resistance at 582, and I am not very bullish on the public sector banks right now. I think they have a bit of a downside looking at the face. I personally expect SBIN to correct to the level of 538. So your short-term long positions, uh, don't exit it right away, because the market is looking like it can continue to rally. So instead of exiting it, maintain a stop loss at the level of 571. Now, if it overcomes the resistance at around 585, then you can expect SBIN to go for around 600 level, maybe even a little bit higher, 606 kind of level. So with that, I've come to an end of this session. If you learned something new, if you enjoyed the session, please don't forget to give a thumbs up to this live session. And the recording of the session will be available on my YouTube channel. If you're interested in connecting with me, join my Telegram channel, and I will see you again on Friday in the series called Market Outlook, where I bring to you live market analysis of Nifty, Bank Nifty, and the inter-sector analysis. Until then, thank you so much for giving me your time and listening to me. Namaste.